Hello, folks. And although the stock market is going down because of bad inflation numbers, they were 2.7 up from 2.4 the previous month. So some of those tariff effects are finally starting to hit, and they were above the estimated 2.6 headline that they were looking for. Because of that, the stock market's down over 360 points at the time of the recording of this video. Might actually change by market close, but right now, the Dow Jones and the S&P are down. The Nasdaq is up, but that's mainly because Nvidia has lifted them. If it wasn't for Nvidia, they would be down as well. So obviously inflation numbers are not up to par, which means the mighty Jerome Powell will have another argument to not cut rates. And if he doesn't cut this time, he may not cut it all this year because most economists expect inflation to go up the next 2 months, and that's when the next FOMC meeting is in September, where they will discuss whether to cut rates or not. And if inflation is hovering above 3% in September, which it's very likely to hover above 3% because we're already up to 2.7, and the heavy brunt of the tariff effect hasn't really even hit yet because most of the big tariffs have not been implemented yet. And I don't think many of those countries are actually making deals. We're looking at a deal with Vietnam, which the government in Vietnam has not formally accepted. Trump's touting a deal with Indonesia, which they have not formally accepted either, and the rest, they're just not really making deals. So we're looking at 30, 40, 50% tariffs, and that hits the US economy. That is going to make prices go up 2.4 to 2.7. That's still alleviated by the somewhat low gas prices that we actually have now, and OPEC is going to produce more until September. So I expect gas prices to remain low, but we don't really know past September, and there is a good chance we don't really get any cuts by the end of the year if we should go above 3% inflation rate by September, which I give it like a 50-50 shot at this point. So basically that's where we are right now, but crypto has actually held pretty steady. Yes, we're down to 117,000, but that retrace isn't all that much. We'll probably go into the 116s, but if you look at the altcoins, they actually haven't been suffering that much. It's not like they went down 10%. Most of them are still holding. We have yet to, we definitely have to see like if they'll hold tomorrow. Things like SUI are still very, very much up, but others have started a bit of a retrace. I think if we go below 115, I definitely think we'll see some price retraces. And if you want to take some profits right now, probably not a bad idea. I mean, I know some of it looks juicy right now, especially Ethereum, up to 3,078. But if Bitcoin starts tanking to 115, 114, 113, I'm almost sure these will go down as well. So be careful and maybe take some profits. So yeah, that's very, very good news. In terms of crypto week, we got to talk about this. Trump is calling on Republicans to support the first genius vote on Tuesday. But as we know, and surprisingly, CNBC, a mainstream media outlet, actually did report on this. So we have some progress there that like big news is actually talking about it. But unfortunately, his Trump-backed crypto regulation bills failed to clear key hurdle in Congress because several Republicans did actually vote for Democrats, and they're waiting for new amendments on the bill. I think they're going to go out for a second vote this week. I don't really expect any rules to actually be signed this particular week. I think they might get something done before the August recess, but there's many rounds actually left. So several cryptocurrency-related bills backed by President Donald Trump failed to clear a key procedural hurdle in the House of Reps on Tuesday, dealing a major blow to the cryptocurrency industry. Now, some people are going to be disappointed by this, but like I said, if you've been following along, you know how long these bills take, what revisions they get, you shouldn't actually be surprised by this at all. Like I've said in this whole time, I don't expect too much to get done this week. It's a nice moniker, crypto week. And plus, like these bills like Clarity and Genius, they're really not going to pump any of our coins. The final vote was 196 to 223, with 13 Republicans voting with Democrats to block the procedural motion. House leadership tentatively plans to hold another vote later in the day Tuesday to advance the legislation. They're really trying to advance it because Trump wants to advance it, but there are a lot of holdouts. It was unclear Tuesday whether the second vote would be for an identical rule and the same bill. So they could actually amend it, but if they amend it, they have to go through a Senate vote as well, or whether the House Republican leaders will make changes to the package to satisfy the defectors. Now, there's several amendments, like we've mentioned, the one that ensures custody, the right to custody for people, and the one that basically blocks president, vice president, or Congress from endorsing or making their own coin, which I think both are heavily needed. So the vote was a rare instance of House Republicans refusing to take direction from Trump. Trump hailed Crypto Week during a post on his Truth Social earlier on Tuesday and urged all House Republicans to vote yes on the measure. The House will soon vote on a tremendous bill to make America the undisputed #1 leader in digital assets. No one does it better, but it did fail. I do actually think it probably will succeed the second or third time it goes through. And then hopefully by the August recess, we'll actually have something signed in. But that is still very, very optimistic. The Genius Act is going to put our great nation light years ahead of China, Europe, and all the others who are trying endlessly to catch up, but they just can't do it. China is not going to try to catch up. They're not really going to let cryptos through. Europe has its own features. They have MiCA, but that mainly deals with stablecoins, but so does the Genius Act. Digital assets are the future, and we're leading by a lot. Get the first vote done this afternoon. So the thing about that is he probably doesn't want any of these amendments, and especially the one where you can't endorse or create your own crypto, obviously because of Trump coin. Obviously, he's trying to push this through for his own sake as well, because he has a stable coin, USD1, that he wants to use to actually make money, and he's like pushing companies to actually use USD1. So unfortunately, the vote didn't actually go through. I think the Genius Act, like I said, mainly deals with stablecoins. It would give us a lot of stablecoin clarity, which would actually permeate crypto in use cases, although not the cryptos that we invest in, like stablecoins. They would permeate the use cases in stablecoins, and I think that would help on-ramp more people to crypto, because if you already have USDC, USDT, it's much easier than only having USD and then on-ramping. I think it'd be much easier to on-ramp via DEXs and other instruments that way if people actually had USDC, USDT, which is why I'm all for it. The other thing is Ethereum is getting more popular among institutions. So like the No One CEO told Cointelegraph that corporations are increasingly adding Ethereum to their treasuries, drawn by its utility, staking yield, and dominance in tokenized asset protocols. I think Ethereum could actually have a strong period in the next month or two where it actually outperforms Bitcoin. It's been doing so over the last few weeks, but I think, like I said, I think Ethereum can go to 7,000 in a true bull run. Don't think Bitcoin will double in price. Corporations are increasingly viewing Ethereum as a critical infrastructure component, fueling a surge in Ethereum allocations within corporate treasuries, according to Ray Youssef, CEO of finance app No One's. Ethereum starts to look like a hybrid between tech equity and digital currency. This appeals to treasury strategists looking beyond passive storage, Youssef told Cointelegraph. Top corporate Ethereum treasuries have purchased at least $1.6 billion worth of Ether in the past month. On Monday, BitMine, chaired by Fundstrat's Tom Lee, revealed that it holds 163,142. So Ethereum is gaining some traction among institutions, but still nowhere near the amount of Bitcoin, looking at the amount bought. And of course, Michael Saylor and MicroStrategy, unfortunately, are not in the least bit interested in Ethereum. So other people are tweeting on Twitter. Blockchain Technology Consensus Solutions saw its stock jump 100% yesterday before announcing plans to accumulate 224.5 million more Ethereum. So some of these blockchain companies, you might think about buying the stocks rather than buying some coins. I definitely think they'll actually do well. They plan to generate capital via their existing ATM equity offering, convertible to debt arrangements, operating validators, and borrowing stables on AAVE. Youssef said the shift allows utility now rivals narrative in driving institutional choices. Now, I don't really believe that just because of the disparity between Bitcoin and other crypto investments. I do think that some of these corporations are looking at diversifying their portfolios, and now they're buying Ethereum. Now, remember, they're not buying the Ethereum ETF, so the ETF actually has no part in this. They're just buying Ethereum. And I do think one of the major things that's driving Ethereum adoption is its yield. Remember, Bitcoin's mining, it does not have yield. Obviously, like people like to make passive income, and Ethereum allows them to do that, which is why Ethereum looks better than Bitcoin. I do think those that offer some kind of passive yield, those coins that offer some kind of passive yield, will actually outpace the coins eventually that don't have a passive yield in the financial industry. He predicted that Ethereum's influence will continue to grow. Ethereum increasingly becomes the digital rail for tokenized assets, stablecoins, and smart contract execution, becoming preferred reserve currency for firms operating in these areas. Obviously, like you want your preferred currency to generate yield, so you can actually sell some of that yield to fund your business operations. So that's the deal with Ethereum. And I think hopefully the ERC20s and the rest of the altcoin market will actually rise with Ethereum. Ethereum has remained very, very strong. And Kraken is going to start a derivatives platform because they acquired NinjaTrader a while back. And NinjaTrader obviously is a derivative platform. Hopefully for me, this means Kraken will open up some affiliate programs with futures with good commissions so I can shill for Kraken instead of BitUnix because Kraken does have a USD on-ramp and they can probably pay me in USD as well, which makes them better than BitUnix in terms of getting me, sponsoring me. So crypto exchange Kraken has launched a derivatives platform for U.S. traders offering access to CME-listed cryptocurrency futures and expanding the availability of institutional-grade trading tools. On Tuesday, the exchange announced the launch of Kraken Derivatives US, providing access to futures contracts via the Kraken Pro platform. The move expands Kraken's product suite by expanding futures trading alongside its existing spot market offerings. According to Kraken Pro, access to Kraken Derivatives US has been rolled out initially in Vermont, West Virginia, North Dakota, Mississippi, and Washington, D.C. So if you are in those areas, you can actually trade derivatives via Kraken. Before the acquisition, NinjaTrader had built a strong reputation as a retail futures brokerage. Now, for my part, I've never actually heard of NinjaTrader, but then again, I don't really trade derivatives, so there's a lot of stuff in that market that I am unaware of. When the deal closed in May, Kraken said it planned to expand its offerings across both the Kraken and NinjaTrader platforms to include stocks, options, and prediction markets. Obviously, I think the stock stuff is going to include Solana. Obviously, we know that Solana has a partnership with Kraken to tokenize stocks. So that actually might be a big boon for Solana as well. Kraken remains one of the largest crypto exchanges in the world, and daily volumes exceeding $1.7 billion as of Tuesday. So crypto derivatives are expanding. I think they're definitely going to expand more in the US. It's a huge boon for these exchanges as they can make a ton of money getting people to trade derivatives, way more than they can actually get people trading spot. So they're going to be all for essentially getting these derivatives in place and these derivative services in place. For people need to watch out, there is a 30,000 phone bot farm stealing crypto airdrops from real users. Obviously, another scam kind of company. The industry has absolutely no clue how sophisticated this stuff is. This is electronic warfare. It is getting very, very sophisticated, so people need to watch out. So it was in a refrigerated tin shed just 40 minutes from Ho Chi Minh City, that's in Vietnam, that Mirai Labs CEO Corey Wilton finally understood the immense scale by which crypto airdrops are being gamed. Obviously, airdrops are very profitable. Some of these airdrops are multi-million or possibly even into the billions in terms of worth, so it's worth it for them to do this. It's genuinely scary. Wilton tells magazine shortly after using a phone farm in southern Vietnam, which he estimates has at least 30,000 smartphones in a room no larger than a studio-sized apartment. There, I think they're just hijacking stuff. For 4 years, Wilton had been hoping to get a first-hand look at the type of operation that undermined his flagship NFT horse racing game, Pegaxi, in 2021. I guess he got pwned by this as well. When Pegaxi blew up, we were sitting at a max DAU, daily active users, about 500,000, and at that point, we started getting a lot of reports of botting farms. Obviously, these are a big issue. They hijack a lot of stuff using electronic power. The bots would control 100 accounts at a time that would snap up high win rate horses and race them for a chance to win in-game currency, which then can be sold for real money. Obviously, you're using AI bots against humans. Obviously, AI bots can be active 24/7. Humans can't, so it gets them a huge advantage. So if you're playing some kind of reward game or play to win game, the AI bots are obviously going to have a huge advantage. And this obviously hurts crypto gaming. I mean, people in certain games, they're against gold farm bots, but this can be a huge problem. So I recognized pretty early that they're essentially extracting from our user base, and it basically set me on a warpath. But obviously, these are very, very hard to actually combat because they're extremely complex operations, have a lot of electronics in them. They control tens of thousands of cell phones, all have separate accounts, and it's hard to actually delete them all. Wilton says that in an example he saw, a human would use a computer to control a master phone connected to over 500 slave phones. Whatever was done on the master phone would be replicated by all the slave devices. So essentially, yeah, like they're essentially using these rows and rows of phones to basically snap up the best, I guess, like NFTs in games. And once they do that, they use that to make money and basically outcompete all the other players in game. So crypto gaming definitely has a huge problem because of these bot farms. So yeah, we do need to be careful of that. And they do really need to fight this if crypto gaming wants to have a chance in the future. Another piece of maybe bad news, a lot of old crypto wallets are actually waking up. This time it's a 14-year-old whale. And 14 essentially means 2011 has not been active since then. A lot of like whale wallets from that period are starting to wake up. And it's reasonable that people are actually afraid of this. So hopefully he's not trying to cash out the transferred Bitcoin. It's 4.6 billion in Bitcoin after 14-year hold. Satoshi era Bitcoin whale has reawakened after 14 years of dormancy, potentially looking to sell more than $4 billion worth of BTC, hopefully to Michael Saylor. The major cryptocurrency holder has 80,000 Bitcoin in their stash. The whale transferred 40,000 worth over 4.6 billion on Monday, of which 28,600 Bitcoin were subsequently transferred to Galaxy Digital. Data from blockchain intelligence platform NASN shows. On Tuesday, the remaining 10,000 worth 1.2 billion was transferred to Galaxy Digital, bringing the total value in the past 2 days to 4.6. So, all the coins are at Galaxy Digital right now. According to on-chain analysts, these movements to Galaxy Digital may signal that the whale intends to offload a significant chunk of that stash, obviously via OTC, hopefully, which means it won't affect prices directly, but it'll increase the amount available basically via OTC. And guess what? Michael Saylor is going to have to buy that up. I mean, I wouldn't be surprised if this was like a direct transfer to Michael Saylor. Because remember, Michael Saylor did actually raise about $4.2 billion to actually buy Bitcoin. So the numbers almost equal out. And this is a kind of a worrying whale pattern right now. A lot of big wallets are basically waking up. And this one looks like it actually intends to sell. The Satoshi era whale has held onto their Bitcoin stash since 2011, when Bitcoin was trading below $30. The savvy investor has realized more than 2.4 million % increase over the last 14 years. Yes, 14 years is a long time, but obviously 2.4 million % increase, that's well worth the wait. So if you're concerned about this whale, I think you have reason to, but I think Saylor and others can actually buy this up. And I think like some of these whales are probably the reason that we haven't gone up like a huge amount, despite the massive imbalance between supply and demand, because these guys are driving the demand market as well. And of course, our favorite trader, James Wynn, is back. That's right, he's back and he's wanting to be wrecked more. So Wynn previously claimed that his leverage positions were deliberately hunted by crypto market makers, which they were 100% hunted by crypto market makers, looking to sink Bitcoin's price below his liquidation threshold. It's only a $19 million leverage swing, so it's not nearly as big as some of his previous bets, but it can still be pretty earth-shattering. Multi-millionaire currency trader James Wynn returned despite numerous previous liquidations, signaling renewed confidence in Bitcoin's near-term upside momentum. And yes, Bitcoin does have a lot of near-term upside momentum, but I don't think things are going to turn out any different from James Wynn, because James Wynn is being hunted, and also he does like really reckless trading, which means he's eventually going to get liquidated because he obviously doesn't cash out when he is up. So I have no doubt that he's going to lose this amount of money. So Wynn returned with 2 new leverage positions, including a 40x, which is more than 10 times what I would recommend, long position worth over 19.5 million at 117. So essentially, like right now we're about 117. Since he did a 40x, that means if it actually moves like 3% in the other direction, he will get liquidated. So if it gets to like 113, he is screwed. And I think there's a very, very good chance that he gets screwed. Actually, his is actually even worse, because if the price falls below 115.7, he gets liquidated. So, 115.7 isn't that big of a fall, and he can easily be hunted in that specific direction. Not a very smart move by James Wynn, but I don't think any of James Wynn's moves are smart. He actually had a second position as well, a leverage long on Pepe worth over 102,000, which was opened at 1.2 cents, but the position's liquidation price remains unknown. But if it's 40x, it's probably like 1.1 or something like that, which is crazy. But let's actually go to the charts right now to see like what's going on. I don't know if the charts have actually changed that much. You look at on TradingView, you look at the MACD, it is positive, although getting slightly more negative on the latest candle. I do think like that's, kind of the crypto week thing. Once crypto week started, it was going to go a little bit negative. And obviously, as I predicted, as the week goes on, we're getting negative candles. And the CPI today was not that good. So I do expect some negative action going into the rest of the week. So yeah, I don't know if I would short right now, but I don't think the macroeconomics actually favors bulls at this point. Now, overall, I do actually think that as the summer ends, we'll actually go higher and higher. But at least for this week, I would probably hold off on my longing, or if you're DCAing, you're fine. But I am seeing some volume increases right now, just a little bit. I definitely have to see more volume increases here to actually get me more excited. I do, like I said, believe that we'll dump maybe down to even 110, but after that, I don't think we'll dump below 100 based on kind of just the way things are going. Could be wrong though, but I think we're going to be somewhere between 100 and 110. Probably going to go sideways for a while before going back up. The CPI is going to hurt that because if it came in under 2.5, I think would have gone up immediately. But it did not. It did not actually come in under 2.5. So I don't really. I really don't see the. I don't really see the I guess incentive for people to pump much more. So if you look at the Binance liquidation map, look at here, there are actually more short liquidations than long liquidations on the 1 day, but we're closer to a big long liquidation to the short liquidation. I think this one's at 115.6. This I do actually believe is kind of due to James Wynn. But if he gets liquidated, we could actually dump down to 114, 113, which would be pretty devastating to alts, although not to Bitcoin itself. If you look on the 7-day, it's getting more even. I think there's there's a big one right here at 118.5 on long liquidations. On short liquidations, but there's a lot that's very, very close to long liquidations. And we could liquidate, down to 110 pretty easily. On the 30-day graph, longs definitely outpace shorts, and there's a lot more chance for long liquidations. So there's a very good chance that the whales will push it back $1,000 or $2,000 to start some long liquidations. So I would definitely be careful in taking long positions right now, because right now it does favor long liquidations more than shorts liquidations. So that's the news for today. Let me know what you think. Like and subscribe, hit that bell notifications button. Thank you and have a nice day.